Hi everyone, welcome back to my channel, the eighth wonder of the world. I'm going to talk about a retail company which had a bad quarter results but is run by solid management, and there is an opportunity to buy the shares of this company at a low price. Friends, if you're new here, subscribe and press the bell icon for more notifications from this channel. Comment below about your opinion of the company. Company's description. The industry type is retailing. It is also into combined facilities support activities. The company was incorporated in 2017. Headquartered in Kolkata, West Bengal. It has a market capitalization of 694 crores, so it is a microcap. Let me talk about the history of the company. I was surprised to know about the rich history this company has. Since 1863, the company has been part of India's retail landscape. At one point, the Spencer's empire stretched from Peshawar to Kochi, from Karachi to Chittagong, spanning the length and the width of undivided India. Originally owned by the British gentleman Mr. Spencer, John William Spencer, it was acquired by Indian ownership in 1960 and became part of the RPG Group in 1989. In 1995, RPG Enterprise, the flagship company of the RPG Group, launched the Food World as joint venture with Hong Kong-based Dairy Farm International. The joint venture, which operates supermarkets under the name Food World and the hypermarkets under the name Giant, was terminated in 2006. The RPG retained 48 of 93 stores it owned. These were refurbished, and their launch under the brand name Spencer's kicked off a new pace in both the history of Spencer's brand and the retail in India. So the friends who are not heard about the company RPG Group is the industrial conglomerate company, which the full form is Rama Prasad Goenka Group, which is commonly known as RPG Group, and they have their headquarters in Mumbai, Maharashtra, and it was founded by RPG Goenka in 1979, and they own Philips Carbon Black, Asian Cables, Asperat Jute and Murphy India companies. Since inception, Spencer's has been a consumer-centric brand, constantly innovating, pioneering formats, evolving over time but always keeping consumer needs and satisfaction center stage. Back in 1920, they were the first grocery chain in India. In 1980, they became the first supermarket chain, and in 2001, India was introduced to the joys of hypermarket shopping. What remained unchanged for 150 years is the trust that Spencer brand evokes. For the consumer, it carries a promise of innovation, quality, and service. The confidence they will always be able to find Spencer store at a convenient location as per what the company claims in their website. Let's look at the stock price detail. The stock is trading at rupees 88.40. The stock has given a return of 18.05% in the last 1 month. It has a PE of a negative of 8.29. The price to book value of 1.82. 52-week high of 173.45. 52-week low of 53.80. And it has a cash balance of rupees 229.73 crores and a total debt of 0.85 crores, face value of rupees 5. The stock market returns versus Sensex. The stock has underperformed the Sensex returns in the last 1 year by a minus 15.22%, where Sensex has given 15.14% in the last 1 year. And it also underperformed the sector by a minus 86.58%, as the sector returns were 49.50%. And this is aided by D-Mart, V-Mart, India Mart, which has done really good in terms of stock price. The company has not paid any dividends. The company has an adjusted beta of 1.50 with Sensex, which makes the stock highly volatile. Stock return versus Sensex. The stock has beaten Sensex returns in most periods that it has been listed. The 1 month return is 18.50%, 3 month return is 40.21%, 6 month return is 23.38%, and 1 year return is a negative of 37.08%. The YTD returns have been better for the company compared to the sector and Sensex. The stock's performance against the benchmark S&P BSE Small Cap and S&P BSE Sensex has been very bad. The performance versus peers. On the chart, you can see that the company has performed very badly when compared to its peers. India Mart and V-Mart Retail have beaten the company hands down, and it has given a better return compared to Spencer's Retail. Now, talking about the risk adjusted return versus Sensex. The company is in high risk and medium return category, as you can see in the chart. And the absolute return for the year is a minus 37.08%, which is mentioned early, and Sensex is at 15.14%. The risk adjusted is minus 0.63 versus 1.08 of Sensex. And the volatility is at 58.72% versus 14% with Sensex. The shareholding pattern as of December 2019. So the majority shareholders are the promoters. None of the promoters are pledged shares. It is held in 12 mutual fund schemes, which accounts to 4.81%. It is held by 48 FIIs, contributing to 6.18%. The promoter, the highest holding is Rainbow Investment Limited, and the highest public holding is by India Insight Fund Value Fund, which is 2.92%, and individual investors hold 18.27%. Now, talking about the shareholders comparison between the two quarters. So the promoters holding has increased by 1.32%. The FIIs holding has decreased by a minus 2.17%. Mutual fund holdings has decreased by minus 4.14%. And the insurance holdings has decreased by 0.83%. The DIIs have increased their holdings by 1.58%. And the non-institutional shareholders has increased by 4.23%. Now, talking about the quarterly results, which was actually very bad compared to the results of the other competitors. The net sales quarter-on-quarter growth for December 2019 is at 0.04% versus 16.43% in September 2019. The consolidated net profit, the quarter-on-quarter growth in December 2019 is at 0.15% versus a minus 1.58% in September 2019. 13.31% in September 2019. The operating profit excluding other income for the quarter ended December 2019 is at minus 13.31% versus a minus 37.13% in September 2009, which actually is quite bad. Interest growth in the quarter ended to December 2019 is at 3.26% versus 87.68% in September 2009. The operating profit margin growth in the quarter ended in December 2019 has fallen from September 2019. So what makes the company to be tracked by us, which has a huge potential to give good returns on the long term? The promoter holdings. So as you can see, the promoter holdings, there are some marquee promoters: Rainbow Investment Limited and Sanjeev Goenka, Shashwat Goenka, Preeti Goenka. So this provides a solid promoters. And one more thing I wanted to highlight is about the public shareholding details, which mentions that Radhakrishna S. Damani has 2.089% in the company, and even the other public shareholders as Canara Robocorp Mutual Fund and even India Insight Value Fund and LIC have stake in the company, which shows the value the company holds. The decision to buy. The company has solid promoters who are involved in running the company. Individual superstar investor Damani sir has raised stake in this company. I know it is not good to follow the investment of others, but the company is in the retail business, which can give good returns on the long-term basis. I believe the consumer space will expand in a country like ours. The company has a very low debt. The company is for the investors who have an investment horizon of 3 years. I like to apply Mohani Pabrai's thought process of 3 years. This applies for individuals looking for investment in the company. Going forward, the stock price might provide good opportunity to enter at lower price, as the company has not done particularly good in the recent quarters in terms of the financials, but it is a value buy. Huge delivery buying after the price is corrected so much is an indication that individuals are adding the company as it is available at a lower cost. The company has done badly while the companies in the same space have done especially good. The V-Mart, India Mart and D-Mart. All these companies are also a good bet to buy at their current trading price. So the company is actually a good buy in this space. Investors with a long-term horizon can reap good rewards from investing in the company. But wait for more correction. Thanks for watching this video. Please like and subscribe and press the bell icon for more notifications from this channel. This content is intended to be used and must be used for educational purposes only. Please do your own analysis before making any investment based on your own personal circumstances and consult your financial advisor.